If you're looking for highly educational market analysis, you're in the right place. You're in the Transparent FX Academy. I'm Nick, a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I want to speak about NZD USD. Now, why do I want to speak about NZD USD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then dropping down on the lower ones. We will also then go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting here on the monthly, we can see how the market is currently testing a quite strong level of previous monthly support, which the market has now broken to the downside. And at this point, this previous support is turned resistance here. And as we are testing previous support and resistance, there is definitely the possibility for the market to provide a rejection to the downside for the creation of a new monthly lower low. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see how, first of all, the market did create this M pattern. Now, as I said many times, after the creation of an M pattern, what you expect is for the market to create a move to the upside to go and complete the pattern at the previous support turned resistance, which is also the neckline of the M pattern itself. And in fact, the market created this move to the upside and went and completed this M pattern at the previous support turned resistance. And after the completion of an M pattern, by definition, the neckline is, as we just said, previous support turn resistance. So what we are actually testing here is a resistance zone that we could definitely expect the market to reject to the downside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have a perfect 50% Fibonacci retracement lining up exactly at this area that we do expect the market to reject to the downside, since this area is very strong supply and resistance. Dropping down on the daily time frame, what do we have? Now here on the daily, we can see that we're currently testing the previous high. There is the possibility for the creation of a double top. The problem is that if we drop down on the lower time frames, so for example the 4-hour, which is a good time frame for potential confirmations, we can see how everything is still bullish. And until everything will remain bullish here on the 4-hour time frame, we can expect more continuation to the upside. So we cannot be looking at the moment for any kind of shorts. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing, and we check the data specifically for the NZD, we can see how lately net positions have been getting very negative. We went from having a positive net positioning with more longs than shorts, 26.3k longs and 12.4k shorts to be precise, all the way down to having a negative net positioning with 34.2k shorts and only 24k longs. So now more shorts than longs from an institutional perspective, which obviously makes the NZD quite weak. We have seen that already reflected in the price action with this downtrend developing, and at this point we can expect more downtrend to develop to complete the impulse correction impulse that we have previously identified on the weekly, and possibly for the market to print this double top on the daily. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective instead of this area waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And if the market will shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point, we could be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of the strategies. Then you also get a daily market breakdown every day to see which pairs I'm looking for according to the rules of the strategies, and you also have the possibility to ask questions and get the answers the same day. So it's a very complete program. We're also currently running a special promotion, and to find out more, the link is in the description, and I will see you on it.